Good morning, everyone. Well, the dollar continues to weaken. It fell against most of the G10 currencies and all 15 of the emerging market currencies that we track. The only exception was the Australian dollar, which itself fell after announcing a surprising drop in employment in August instead of the expected rise. The biggest gainer among the G10 was the New Zealand dollar after the Reserve Bank of New Zealand held a policy meeting. While they left their official cash rate unchanged at 2.5%, as everybody had expected, they said for the first time that cash rate increases will likely be required next year. This is the first G10 central bank to warn explicitly of rate increases. The market now expects a rate hike sometime in the second quarter of the year. Previously, people have been expecting one sometime in the second half of the year. And it could even come earlier if house prices continue to rise at their recent pace. I think the New Zealand dollar could appreciate further as the currency's gains after RBNZ statements tend to continue for some time. Now, there are some interesting trends developing here. The market recently revised up its forecast for Norwegian rates following higher than expected inflation there. It revised up its forecast for UK rates after yesterday's better than expected employment data. And now New Zealand has moved to an explicit tightening bias. On the other hand, expectations for US rates, as reflected in the Fed's funds futures, are being revised down. Some degree of tapering even seems to be fully discounted in the market, meaning we could get a buy the rumor, sell the fact reaction after next week's FOMC meeting. I've been bullish on the dollar for some time, but I have to admit it now appears that until we see the U.S. economy once again taking the lead globally, the dollar could suffer further. Perhaps it would be better to avoid the dollar entirely until the picture clears. Investors should look at the commodity currencies, the Australian dollar, New Zealand dollar, and Canadian dollar, as expectations of higher growth could boost them further. Also, the stocky, the Swedish krona, which is sensitive to improved global growth prospects. Against these longs, I think the yen continues to be the most appropriate funding currency because the Bank of Japan will be absolutely the last central bank to shift to tightening. The ECB is also continuing to discuss ways of easing, and Eurozone growth seems likely to disappoint in my view, so I'd also consider Euro on the short side. You should note that the Euro-yen fell yesterday. Today, the focus is going to be on the Bank of England Governor Carney's testimony to the UK Parliament's Treasury Committee about the central bank's August inflation report. It'll be particularly interesting to see if he's recalculated the time that it might take for unemployment to hit his 7% trigger level in light of yesterday's better than expected unemployment announcement. Eurozone industrial production is expected to have fallen 0.3% month on month, a turnaround from plus 0.7% month on month in the previous month. That'll bring the year-on-year rate of change down to minus 0.2% from plus 0.3%. This calls into question, to me, the validity of the purchasing managers' indices. The Eurozone manufacturing PMI was 50.3 for July. That should mean manufacturing is expanding. I think the euro could weaken slightly on the news. In the U.S., the only relevant indicator for the FX market today is the weekly jobless claims, which are forecast to rise to 330,000 from 323,000. That'd bring the 4-week moving average up slightly to 331,000 from 329. I don't think that's any big deal, and I don't think that would move the markets. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.